We always talk on this show about strategies for long term growth, for making money and all that stuff, and creating and building wealth for our families for generations yet to come. That's what this show is about. So, we always talk about making money. What we don't talk a lot about is tax strategies. And we do at times deal with, we do it sometimes, bring in little tidbits. But today is one of those shows where we have a expert, a guru. Now, look here. He had to break that thing down to me. He had to tell me what CETO means. And he told me that means swift. So what I felt was the wind blow past me while he was swift to provide tax relief to people that need it. So if you make money, you got to pay some taxes. That's what it is, right? Good morning, great morning, guys. Welcome to another fabulous episode of Exit Strategies Radio Show. Hey, I am your host, Colin J. Millett, broker and owner of Exit Realty Group in beautiful state of Austin, South
Yeah.
Carolina. Hey, if this is your first time listening to this show, you, sir or ma'am, are in for a treat. Our mission is very simple. That is to empower our community through financial literacy and real estate education, guys. We are legacy building. That's what we do. Guys, want to give a shout out to those who listen to it faithfully. Charleston Market, PD Markets. Look, you guys rock. From Hollywood, what you know, no good, all the way through Monkey's Corner. Y'all know my mama live out there, y'all. Pastor Evans, Vanderbilt Evans Sr., his beautiful wife, Elder Evans. Thank you all guys for tuning in. Also to the Q family and many others, countless others who tune in and listen to us. Guys, thank you when you bump into me and say, hey, I heard you. You reach out. I really appreciate you. You guys are rock and amazing. My folks in Muddy Mullins, Marion County, guys, thank y'all so much for tuning in, guys. And trustfully, y'all continue to take these tidbits and this knowledge and take it to the next level. So today we have a show for you. We always talk on this show about strategies for long-term growth, for making money and all that stuff, and creating and building wealth for our families for generations yet to come. That's what this show is about. We're trying to take people, always remind people that the purpose of exit strategies is that movement. Our word teaches and tells us about the exodus, moving people from one place to another. That's early book in the Bible. Those who know where it is, second book, but it's early. Short version is, guys, we want people to move in a concerted manner to a better future. That's what we want. So we always talk about making money. What we don't talk a lot about is tax strategies. And we do at times deal with, we do it sometimes, bring in little tidbits, but today is one of those shows where we have a expert, a guru. All right. So if you make money, you got to pay some taxes. That's what it is, right? So we have none other than Fabian Cruz. Now, Fabian is the founder of CETO Tax Relief. Now, look here. He had to break that thing down to me. He had to tell me what CETO means. And he told me that means swift. So what I felt was the wind blow past me while he was swift to provide tax relief to people that need it. So I want you to give a warm welcome. I want you to put the spoon down, let them grits percolate just a little bit more, get a little bit thicker, add a little bit of cream to them. Let's make some nighttime grits this morning. And I want you to give Fabian a warm welcome. Fabian, how you doing today?
Hey, I'm doing great, Cora, and really appreciate the opportunity. I've been watching your show, all your guests, and they bring a wealth of information. So I'm going to do my best today and try to make a very boring subject not boring, which is taxes and the IRS.
Well, look here. I appreciate you doing so. And I know we're going to have a good time because what you're going to tell us today is how we can manage it better. That's what you're going to tell us. So look here, Fabian, tell us high level who you are, what you do, and let's get into a conversation.
Okay, well, first and foremost, I'm a father, married my high school sweetheart, have two little goofballs, 7 and 5 years old. So before anything else, I'm a father. And a number of years ago, I started CETO Tax Resolution. We are a tax resolution firm, and what we do is we help individuals who somehow have gotten in trouble with the IRS or their state tax authorities or state tax authority, and we help them get that mess cleared up So that way they can get their lives back and they can get back to business, get back to what they need to do in order to make money.
Let's take a short break.
Do you remember your grandma's front porch? You know, that spot where stories were told, kisses were stolen, and sweet tea was always being sipped. Now imagine giving your family a place to make those same memories, but in a brand new, energy efficient, and home that was built just for you. At Country Boy Homes, we help folks just like you find that forever feeling. Whether it's your first home, your next home, or we're done with rent forever, like seriously home. We specialize in affordable and durable manufactured and modular homes, the kind that make room for muddy boots, big dreams, and second helpings. Come see what coming home really feels like. Call 843-574-8979 today. Country Boy Homes, built to last, priced for you. So what was the catalyst for you in this? What caused you to say, hey, this is arena realm that I want to work in, or where I believe I can be of assistance to others?
Well, sure. So I didn't start out as an entrepreneur. I'd been praying about it for years, trying to come up with all kinds of ideas. And this one kind of hit me close to home. I remember I got a call from my mom, and she was just really upset. And she went about telling me they just were notified by the IRS that she and my father had this very large tax debt. And there was absolutely no way they were going to be able to pay for this. They're on a fixed income. As we started to really dive in, we realized their tax preparer, they weren't even an advisor, gave them really bad advice and ended up having this huge tax bill. And so I started to work with my folks. We went out and we found a tax resolution company in order to help them out. And what I found, Corin, was it was just as painful working with that tax resolution company than it was working with IRS. And here's what I mean by that. Every time we would call in, we spoke to someone new. They had no call continuum. So they were telling us, hey, all right, we got to research and get back to you. And then if we were lucky, we'd hear back in a day or two. Fortunately, everything got worked out and my folks, we got it cleared up. And as I was sitting there, and I've been praying for well over a decade that I wanted to do something that I owned, it dawned on me I could do this better. With all my experience I gained in corporate America, I could take all those skills and I could start a tax resolution company and have my clients have a better experience. And so that's actually the genesis of our company. And real quick, I always like to point out my mother would always say, I just feel like life is on hold. I just want my life back. And that's actually inspired our tagline is you deserve your life back. And so that's the genesis of the company.
That is, wow, man. That's awesome. I can imagine how good it felt to be able to help mom and help your parents in dealing with this. And you deserve your life back. I like that tagline. So some people understand, some people don't, the impact of these types of situations. So, real estate investing, people are buying and selling properties. Oftentimes they're seeking to make money. And depending upon how they structure a transaction, because we talk about, Fabian, all types of things on this show, 1031s where you can defer taxes. But if someone operates outside of a 1031, every time they sell a property, they have income that's untaxed income. So they're going to have to report that. And if you let it accumulate, then it could interfere with other things, kind of what you're talking about. So what are the potential risks, perils, if you will, of, let's say that you operate outside of a 1031, that you're making money flipping properties or what have you, or accumulating properties, rentals or whatever, and that income hadn't been fully reported or taxes hadn't been filed on it. What is the potential risk there?
The first thing is in that if you don't file your taxes, you're going to have a penalty of failure to file. I took some notes because I just want to make sure I get all, because there's so much information in the IRS publication. So that the fee alone for failure to file is 5% per month, up to 25% of what's owed. So I always tell everybody, if you file, because if you can't, at least if you can't pay, that penalty is only 0.5% up to 25%. So literally it's 10 times less. So that's actually the first thing I always tell people. That's our first strategy is if somebody has unfiled tax returns, we get in there and we get those filed. So that way we can stop a lot of the collections process. And
Mhm.
then as far as long-term implications, I mean, you could easily end up in a situation where you have a lien, and that's where the IRS, that they're going to secure their interest in your property. And so they're telling all the other creditors we're first in line.
Mhm.
And that's going to open up a world of trouble. First thing is it's going to impact your ability to borrow. Second thing is if you're able to borrow, you're going to pay a lot more. And I'm not a real estate guy, but I know part of the real estate plan is you borrow that money as cheap as possible. And if you're paying above what the current rate is, that's going to mess up your formula for profit. And then I know I've been listening to Bigger Pockets, another podcast, and they always talk about the Burr method. And I had to write this down, and that's buy, rehab, rent, refinance, and repeat. Well, here's the thing, if you have a lien, you're not going to be able to refinance,
Mhm.
period. And so that revenue source for you, if you want to say it that way, it's completely dried up.
Mhm.
So you no longer have opportunity. And also, too, something else that's really big, I'm getting calls about this all the time, is people who are syndicating, looking to raise money. And I have some clients that have come to me and they're like, "Hey, is this a good deal?" I'm like, "Well, I'm not a tax resolution, or excuse me, I'm not a real estate guy, but let me give you my 2 cents. Do the numbers make sense? Yes. Okay, cool. Who's this that's asking you for money? Have you asked them for 3 years as far as tax returns? Have you checked their credit? Have you done a background check on them?" And almost everyone I talk to always says no. And I'm like,
Mhm.
well, okay, this guy just asked you for a chunk of money and you're only looking at one side of the coin. It's going to impact also, too, for the sophisticated investors, it's going to impact your credibility. It's like you can go on as far as how this would negatively impact you. And then also, too, it becomes public notice.
Mhm.
So your business is out there for everyone to see.
So, Fabian, you kind of touched on a few things that kind of gets over into those strategies that you can employ to mitigate or otherwise limit your risk, right? Because again, and for our listeners, guys, this is a conversation of whether you are an investor. This is an everyday folks conversation as well. So please don't tune out because it may seem that it applies one place and doesn't apply another. But Fabian, where and what can people employ as strategies? So let's kind of continue on that vein to try to mitigate some potential risks.
So whenever people come across my desk and they have issues with taxes and they're business owners, and if you own real estate, you're a business owner. That's just how it is. 9 out of 10 times, the issue I see is the improper setup of legal entities. It's
Mhm.
the first thing I see. Someone, they buy a home and they may set up an LLC, which is great. Then they don't separate their finances. So that's the first thing. If you have a business, it needs to have its own business checking account
Mhm.
because the corporate veil can be pierced very easily. But also with that, if you have multiple properties, set up a holding company, and then all your properties, set them up into single member LLCs that roll up into that holding company. And what that's going to allow you to do is it's going to make things a whole lot cleaner for you. Corin, I can't tell you how many times people say, "Well, I have this LLC I did online." I'm like, "Okay, cool. Let's dig into it." Well, you don't even have the property listed on here. Or if you do, you're writing checks out of your personal checking account back and forth with it.
Mhm.
Like you're not treating it as a business, you're treating it as a hobby. So that's all. So people, we got to clean up your situation. That's one of the first things that we implement is let's clean up well, let's get your tax debt addressed and then let's clean up the situation. So that way, moving forward, you don't have this red flag hanging over your head for the IRS to zero in on.
So let's kind of go on the other side of the coin. Okay.
Okay.
So let's make an assumption that we did not mitigate well, right? What does this look like? And if you could share some stories, insights, or otherwise experiences that you and your team have had as you've worked with people to try to help them get their life back.
Sure. I want to use an example of a recent farmer we helped because he did everything right.
Hmm.
And unfortunately, let me go and lay the groundwork. People who are dealing with back taxes, they're not these criminals in the alley. They're not these shady people. They're everyday Americans, taxpayers. Something happened out of their control and they just ended up where they could not pay this debt. So I'm going to
Hmm.
use this example of this farmer we had came to us owing $300,000. What had happened in his situation, he sold part of his farm in order to help pay for his wife's cancer treatment. Unfortunately, she passed away. And add insult to injury, he was hit with that $300,000 capital gains tax. Here's the thing. He owns three businesses. He's got his farm. He has a trucking company with 18 wheelers. And then he owns a harvesting company.
Entwined. Yes, sir. Mhm.
Exactly. And he was sitting on a huge chunk of cash in the bank. And so what we had to do is we had to tell the IRS, well, hey, oh, and then not to mention that money in the bank was in his personal checking account. So what we had to do is we had to explain to the IRS, listen, look, this is money that's directly going to the operations of his three businesses. And
Mhm.
not to mention some of that money is SBA money. So what we were able to do is we were able to go in there and put him in what's called a cannot collect situation. So the
Mhm.
IRS said, they're like, okay, we're not going to try to collect from him whatsoever. Even though he had the money to pay this off, we're able to
Mhm.
show it was already allocated to his businesses. And so here's the cool thing. And so we were able to get him in that situation. But what he did really well was he filed his taxes every year. So that immediately starts the clock as far as how long the IRS can collect.
Mhm.
So a third of that is going to be gone next year. And the second third of that's going to be gone the year after. And then in 2027, that last third is going to be wiped off because it's reached the statute of limitations as far as what the IRS can collect on. So he was
Mhm.
able to get past that $300,000 with nothing, without having to pay the IRS anything. And you want to talk $300,000 is a lot of money. Yeah, and here's the cool thing. So what we did was we're like, all right, we got you cleaned up. Now we're going to help you stay out of the crosshairs of the IRS. We're going to get your LLC set up on each of those companies. And he doesn't have any employees. They're all independent contractors for the season.
Mhm.
Setting him up an S-Corp. He's going to take a modest salary and then he's going to take a K1. And just that alone is reducing his tax liability every year. And then, not to mention, we put all of this into a revocable living trust. So he's older. So when he passes away, it's going to bypass probate and it's going to go directly to his children without having to put it all in the courts and everything. So I hope that was answering your question.
Yeah, actually teed us up very, very well for the next question, which is,
Okay.
as business owners, and again, for a reminder, if you own rental property, you're a business owner. Okay, got a business.
Absolutely.
So you said something in that kind of tees up the next section of what I want to kind of talk about, which is that future planning. So you said that you guys structure not a revocable living trust that allows him to pass this business on to his family without probate and the liabilities that come with that. Did I hear that correct?
That's correct. So what happens is his businesses and all his assets are no longer in his name, they're in the name of the trust. And so in that revocable living trust, he's got his children named as beneficiaries, also on the trust. So when he passes away, they own the trust too. So there's no fighting in the court saying, hey, this is what dad wanted or anything like that. And you can still have a will that explains exactly how you want things laid out because that's a piece of paper saying exactly that. This is what I want done. The revocable living trust, that's the vehicle to get it done.
I like that. So what's interesting, and it's been a little while, Fabian, but I've actually spoke and did a workshop, if you will, on in that particular arena about the living trust and how you can use that. Because oftentimes we get hung up on just the will, and we ain't gonna get into that because this show isn't about probate. It's about the tax strategies you can employ in order to set your family up for better, greater, or and obviously less hassle. So again, this is that arena that you guys specialize in. So give our listeners, if you will, you just spoke of, how you brought someone back from the brink. But let's say someone comes to you in the very beginning, before there's any issues, any troubles. How do you advise them? And if you have a scenario like that, how did you advise them so you're able to help them alleviate potential problems in the future?
So my company, we just focus on tax resolution. When I have a client who comes across like this farmer, for example, where it makes sense to take the service one step further, we do that. And just to let you know, here in about a year, we're launching a sister company that focuses on tax mitigation, asset protection, and generational wealth through utilizing the entities that are out there, all the different legal structures, S-Corps, solo 401ks, self-directed IRAs. But here's what I tell people because I've done it myself. As far as, because I understand you're asking like the estate plan aspect.
Yes.
Okay. The first thing you want to do is you want to get everything that you can out of your name, because I'm not sure this with a lot with real estate agents. You're one fender bender away from losing everything if you don't have an estate set up correctly. So what we want to do is like for our home, our rental properties, we want them in a revocable living trust, not irrevocable, because we still want to maintain control of that trust. So that's the
Mhm.
first thing we do. And then if you look at your earned income versus like your passive income, if you think about it like just two sides of the coin, all your businesses, you want to put those into an LLC. I'm going to use an example of a real estate agent because I'm actually writing a book for real estate agents. So what we want to do is, we want to start an LLC, and typically it's a single member LLC because most of these they don't have a team under them yet, or they're not employing people, I should say. So you want to be an LLC because you want that limited liability. That's what an LLC is. It's not
Mm,
tax savings, it's protection. And then from there, we want to go into an S-Corp. Now, the S-Corp is what's really important, especially when you're starting to make 50,000 or more a year, because that's where the tax savings come in. And then from there, you're able to really deploy like like a solo 401k, a self-directed IRA. What's great about this is I like to call this the country club effect. Because
mm,
back in the day, the reason you wanted to be in a country club is that had the attorneys, had the doctors, had the physicians, all these people who knew the game, knew the rules of the game that the rest of us didn't know. And
mhm.
so you want it set up this way. And then also you want a health savings account because you can put, I think like 7,000 a year into that. Because that's one of the number one reasons for bankruptcy is healthcare cost. So that's always my advice is let's set up a revocable living trust. That's your filing cabinet where you can put everything into. Put your businesses into an LLC. Let's have all those businesses run into an S Corp. So that S Corp collects all the money and then that S Corp writes you a check. But here's what's cool. So with that S Corp, you can start putting money into a solo 401k, and you can
Mhm.
also match it as an employer as yourself. So instead of putting in, I think like it's like what, 23,000 this year,
Mm.
24,000, you can put up almost $70,000 a year as an individual. And Corey, there's some real estate agents out there they're making a lot of money. They're looking for ways to invest their money. And this is a really cool way because once you put that money in that solo 401k, you can do what's called a backdoor Roth, and you can move it from a traditional IRA into a Roth IRA, that's like the golden sweet spot. And here's the cool thing about that, you can invest in what you know best. You don't have to
Yep.
invest in Wall Street. So, like, if you know real estate and you got a buddy who's doing some real estate development, you can write a check to that person and get a
Uh,
higher return than what you can in Wall Street. You
exactly.
know, and so there's so many cool things that can be done that, at least for me being Hispanic, my family never had any access to. And so that's my personal mission is to change the narrative for our community. When I say our community, I just mean all people.
I do. So, Fabian, we're quickly getting to wrap up today's show, but how can people get in contact with you, guy? How can people reach you? Where can they find you?
Sure. So you can call me at 1-877 CITO tax. That's CITO. You can go to my website, which is CITO tax.com. And you can also do the same on Facebook.
All right. All right. So, beautiful website, by the way. Guys, look here,
Thank you.
y'all got to check this thing out, man. So, Fabian, I always ask, you've learned a lot. And always, this is a question I ask most of my guests, right? What I realize and know is that if things didn't happen as they did, you wouldn't be where you are. But I will always ask, or usually ask, if you knew what you've learned back then, what would you have done differently? So, if I could ask that question of you, what would that answer be?
Oh man, back then when I would have, I'd have bought fourplexes. I'd have bought one, I lived in one, rented out the others. And
Uh-huh,
it was after a year, you can go to another one. You can do
uh-huh.
that again. That's what I would have done, hands down. Yeah.
I love it. So what I
Yeah.
heard you say is immediately I'd have been more involved and engaged in the real estate world. I love it. I would
Absolutely.
have bought a whole lot more property. I love it.
Especially with as cheap as money was back then.
Exactly, exactly. Well, Fabian, I want to thank you, my guy, for being on today, for spending some time with us and taking time out of your busy schedule. Thank you for the work that you're doing in the community, the
Yeah.
impact, and I want to encourage you to continue along that vein.
Yeah. Well, thank you for having me on. And if you need anything, you just reach out.
Will do. So for our listeners, guys, look, y'all got some good useful information. If you got questions, know somebody, whatever it is, I want you to reach out to Fabian and his team. Let's get you connected to the resource so that you're not left laying on the wayside, guys. Let's not do that. We have amazing connections and awesome people who are committed to not only just serving, but to serve you well. So please make sure you all engage. For our listeners, one more time, y'all know how I feel. You know what I say. I always put the two of those things together and I give it to you this way, which is to tell you that I love you, and we'll see you guys out there in those streets.